Okay, we're talking Aspen Pharmacare because last week on the 12th of Feb there was a trading update from them which said that their earnings were going to be 20 to 30% higher, which we think puts them in the range of around £2.50 a share. But going back and asking the question of whether one should still be buying the stock at this level, I'm thinking one needs to put a little background into the global pharma industry. I mean, you understand that this industry scarcely existed before 1950, 1960. When they really began to develop these commercial therapies for what we look at as the big five, which is cortisone, contraceptives, cancer drugs, cholesterol, of course, major seller, and then the last one, it's not really a C, but we thought cheerfulness. I mean, antidepressant drugs are a major seller. The biggest selling pharma drug in the world is Lipitor, which is obviously for cholesterol. And the key thing about this is we're talking about an industry with about $1 trillion worth of revenues. So very substantial and fantastic margins, 16% after-tax profit margins for the global industry. Now, the key thing that's driving the opportunity for Aspen, though, is the conversion to generic drugs. And understand what we're talking about here is 20 years. Patent expiry is what you get with drugs. So anything invented in 20 years ago, now the tail end of the 80s, early 90s, is coming off patent. And that becomes available then for the generic drug producers to manufacture a generic alternative. The second key thing is that globally, there are buyers of pharma which are now much more powerful. So we're talking governments who buy drugs for the public sector health, and also health management organizations, or what we know as medical aids, who insist that their members go on to the generic form of the opportunity. Right, so as far as Aspen is concerned, we're talking about a fantastic company, homegrown, fantastic management, great opportunity, and it's been a real success story. But the real issue here is that we've seen GlaxoSmithKline, which is one of the global pharma giants, tie up with Aspen, which has created this opportunity. And to put things in perspective, and to use my charts again, if this is GlaxoSmithKline, we're talking about a company with a $102 billion market cap, and this is Aspen here with its $4 billion market cap. So they did a deal in September 2008 where they sold them 6 or 7 different cancer drugs, which gave them a global footprint. And they've now done a deal whereby Glaxo has sold their Southern African distribution business to Aspen in exchange for taking a 16% stake in Aspen. So really what we're seeing here is an opportunity to invest in what will be GlaxoSmithKline's high growth, generic, emerging market opportunity. So if you look at the thing, we're talking £2.50 in terms of earnings for half year, times that by 2, we're talking about £5, maybe £6 a share. So it's 70 Rand a share, which is what the share price is trading for. We don't think it's particularly expensive at around 70. We think we can accumulate them all the way up to around 100 Rand a share, anticipating further growth, taking into account the scenario we talked about earlier.